Hey, what's up, Bob Mortgage Nation? This is the 86th episode of the Mortgage Report. All right, the Mortgage Report is a way for me to deliver to you guys on a weekly basis my lock or float position as it relates to interest rates. Now, follow me on Instagram, just search Bob Mortgage, and there in my stories, you're gonna get daily insight. If I feel like it's changing, the market's changing, and I'm converting from a lock or float position, I'm gonna let you know in Instagram stories. Okay, so we're recording this on Friday. Now, the stock market, the futures showed that we were gonna be opening much lower on the stock side, and it did close lower today. Now we did gain quite a bit of those losses back. Now we got some economic news to kind of talk about. The unemployment rate dropped from 4% to 3.8%. Now a lot of that came from household survey news as it relates to the unemployment rate, because it did show that there were significantly more job creations, and then there was also a decrease in the labor force. Now the jobs report, which is another sector of the jobs numbers, showed that there were only 20,000 jobs created. So that was much lower than expectations. But that's why we saw the drop in the unemployment rate from 4% to 3.8% was really from the household survey showing that we had about 225,000 jobs created. Now, we did get some housing numbers as well. The housing starts showed about 18% increase for the month of January. Now, the good part about that was about 25% of that was really tied to single-family residences. So that's just positioning us for a really solid spring and summer home buying season. So don't listen to those naysayers out there. We're in a really good position with the housing sector. Now, as interest rates are related, we're pretty much in the same place that we were this time last year. So if we take a look at some of the technicals, you'll see that the market right now, we closed up 2 basis points on Friday. If we kind of look at where we are on the trend lines here, we're right in the middle of a very big trading range. So we're at a trading range from 102.469 at the top of the red line there. And then we have our floor of support at 102.0731. Now, we're in this middle range, okay? So we have a lot of room to the upside, but we also have some room to the downside. We do have a triple line of support here, so we're definitely in a good place for bonds to bounce back up to the middle of this trading range. Now, what I did, guys, just so you know, is I went ahead and converted from a floating position to a locking position today for my clients that were in a window of about 30 days on the close. We're in a really good position with interest rates. We were able to get enough gain from the last 2 days for us to go ahead and lock it and secure either lower interest rates or lower points to get the rates that they wanted. So I didn't want to go into the weekend and worry about an opening on Monday that could have caused some losses to be taken for a big group of my clients. But outside of that, for new people or people that are looking a little bit longer, 45 days out in closing, because we do manage a lot of build jobs, I'm still in a floating position for those individuals. It just wasn't time to pull the trigger on locking for those. So going into this week, I'm going to go into it carefully floating, look at how Monday's opening comes in, because we do have some inflationary numbers and some housing numbers coming out this coming week as well. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families. I watch the markets daily so I can make sure I deliver to you the right home loan at the right price. With Bob Mortgage, your dream loan is already within your reach.